Welcome back to my channel, Value Investors. In this video, I'm going to be covering a small pharmaceutical company by the name of Harmony Biosciences. You may have not heard of this company. And I actually have been looking for small and mid-sized, mid-cap companies in the healthcare space since I believe that this particular sector is undervalued and should do really well in 2024 as well as 2025. And I came across Harmony and decided to take a small position in Harmony. I continue to track the company and analyze it once a quarter. And I wanted to share my analysis with you and share with you what I'm seeing out of this company and what I plan to do with the stock, whether I plan to buy more shares, hold my shares, or sell my shares in Harmony Biosciences. Let me tell you more about this small pharmaceutical company. I'll make a decision to buy additional shares in Harmony by looking at three areas of the company. First and foremost, I want to be a believer in their business. I want to believe that they're doing something special, that they have something of either a competitive advantage or a big moat or really a great product that customers love. I want to know that they're in an industry that I want to be a part of. And I want to know that their management team's doing a really good job. I also want to take a look at their balance sheet, make sure that they don't have too much debt. And therefore, I want their debt to be less than 3 times EBITDA. And I want the stock to be discounted. My intent is to make money on the stock, and a discount is an assured way of holding the stock for a long time. That value is going to be matched with the stock price at some point, and I want a discount on that stock price. And based on the answers I get to those questions, I'm going to buy, hold, or sell Harmony Biosciences. Harmony Biosciences produces drugs that help patients that have neurological diseases, some specific ones, and they have a few drugs that are already commercially available and being sold to patients. They're successful in helping people, which is great. What they're also successful in is just really having a great linear growth to both patient count and revenues. It's just really nice to see a company grow in a nice linear fashion. The company is profitable. They generate free cash flow as well, which is why I was really interested in this company. Looking at the company's fundamentals, the company has a very small cap, which is $1.8 billion. So it's a small cap. And this company could easily be acquired by a larger pharmaceutical company that's interested in acquiring the company for its revenue and its profit and its free cash flow. Over the past year, it's actually down. And the healthcare space, for some reason in 23, a lot of the healthcare stocks were down. I've made videos on that. It's one of the sectors that I'm most bullish about in 2024. So it's not just this company that was beaten down. And this volatility provided great points to buy this stock. I've been buying into the stock carefully because it's a small company, but it's really had a nice rise here in November to close out the year. It's been trading sideways, so to speak, in 2024, but that's where the stock's been for the past year. As I look at the earnings per share, the company's profitable, generating earnings per share, which is really good. The forward P is really low at 10.24. This is a growing company generating free cash with a 10 PE. How is that possible? It should be 24. And analysts cover the stock, just a few of them, and they have a buy rating on the company. So overall, really interesting company. The fundamentals and the growth trajectory, the number of patients they're getting, all those things look positive for this company. I'm going to value Harmony Biosciences by first discounting the free cash flows I expect the company is going to produce in the future, and second, by valuing it based on its earnings per share. Let's start with free cash flows. So the company reported their full year 2023 numbers, and their free cash flow for 2023 is $219 million. So that's going to be a good starting point for this whole model. Now, looking at historically, their free cash flow has really grown fast. Over the last 3 years, it grew at 49%. Last 3 years of revenue grew 38%. So it's just great growth, blistering growth. I don't expect they're going to stay at that rate, but I'm going to go with a nice conservative growth rate in the first 4 years of free cash flows of 10%, and then long-term growth of 5%. They're small, so they could really sustain a long-term growth of that type. Based on those growth rates, I'm going to grow the cash flows through year 4 at 10%. And then terminal value, which is bucket number 5, is going to grow at 5% for terminal value. It's a small company, so I'm going to use a higher weighted average cost of capital to discount those free cash flows. To get to today's value for all those cash flows would be $3.8 billion. I'm going to add the cash on the balance sheet. They have more cash than they do debt. Take away the debt to get to an equity value of $4.1 billion. The market cap's really low at $1.8 billion. So it really provides an attractive discount if you look at the cash flows that are being generated by Harmony. Looking at earnings per share, it's expected this year they're going to produce, this year being 2024, they're going to produce $3.34 per share. I'm going to give them a PE of 18. This is a growing, profitable company generating free cash flow. They should not have a PE of 10. I'm going to go with 18. And based on those factors in this formula here, it gets me a per share value of $51.27. Today's stock price is trading at $32. So it provides an earnings per share discount of 60%. So either way I slice it, it provides a really attractive discount. When I blend the two, I get 88% discount, which is a really, really strong discount on this small pharmaceutical company. So should I buy more shares in Harmony, hold my shares, or even just sell my shares? Let's go through it. So first, the company. I do want to be a part owner in this company. I like pharmaceutical companies. I like the space, and I think their management is doing a really good job. In particular, I like the growth rate. I like that they're acquiring customers consistently. I also like that they have a pipeline of other drugs that they're bringing to market. So those things tell me that they have good prospects for long-term growth. The one feedback item I'd put on Harmony is I wish they would provide more information on their company, more presentations on what their business is all about, just to inform investors so that we have a good sense of what the business is all about, get to know their management team a little bit better through those presentations. Their debt is well under control because they have more cash than they do debt. So not a lot of trouble in their balance sheet. Actually, it's a very high quality balance sheet and it provides an awesome discount. So I'm going to keep buying shares of Harmony Biosciences. Every market provides opportunities to find companies that are being overlooked, that aren't even being considered. And I think I found a good candidate for a company that's going to produce good results for my portfolio in Harmony. Now, it's a small company, so I'm not going to jump in head first. I'm going to buy over time, average in my investment, and just have a controlled investment into Harmony. Really track each earnings to make sure I understand the company, understand that they're executing their strategy well, and look for any information and news on the company over time. But these are the types of small companies that hopefully end up being 10 baggers in my portfolio. We'll see. We'll have to track it over the next 5 years. I appreciate you watching the video, and I hope you found it interesting.